Hello, kind people of YouTube. I promised a video yesterday and that just kind of didn't happen, but I'm back now. And as always, I have a bunch of articles open and we are going to take a quick look at the markets. Let's, as with every video, start by refreshing the markets. Oh, and before I forget to say it again, please do subscribe if you want more videos like this. And also, if you have any questions you want me to answer, there's an email address in the comments. In the description. I'm collecting questions to make a question and answer video in a bit, and yeah, if you try to ask me stuff in the comments, there's a much lower chance that I will see it and that I'll respond. But if you write me at that email address, I will look through them, and there's a much better chance that I will get to your question and that I'll respond to it. But anyways, let's jump into the video. Now, seeing the markets here, we're in a bit of a slump today, with most of the major coins down between 2 and 10%. Bitcoin, of course, falling the least. Like I keep saying in pretty much every video, when the markets go down, Bitcoin goes down the least. When the markets go up, Bitcoin goes up the least. The most altcoins are pretty much following Bitcoin, but in an exaggerated fashion. And this is just because people see more safety in Bitcoin. They are more likely to sell off altcoins when the markets are going down, more likely to buy altcoins when the market is going up. And that is why we see more movement there. The market cap has fallen to 206 billion, almost 207 billion. A couple days ago we were at 220 billion. We have gone down quite a bit, but we aren't anywhere near the 180 something billion from last month yet. So I'm personally not worried yet. But unfortunately, this might mean early hints of a potential bull market, where more of a bull trap than a bull market. Well, you can always hope, but I guess this time we got a bit unlucky. But like I keep saying, I'm not thinking in the near term, I'm thinking in the long term, and I absolutely know that in the coming years crypto will take over and that the markets will move significantly. So I don't mind seeing the markets go down or seeing it take a bit. I have patience, and I really think we should all try to have patience, because we know these projects we're involved in, we know these coins that we've invested in, we know what the technology behind them can do, how much adoption there's happening every single day. All that will explode at some point, the question is only when, and it might not happen in the next couple of weeks, but it will definitely happen. And we have a lot of reason to believe that a lot will happen in the coming weeks, especially with XRP going live on XRPRipple. Well, XRP has been live for a while, but XRPRipple has not. Is going live in the coming weeks. We don't have the exact date yet, but we should see a lot of movement with XRP then. And in the last couple days before everything started dropping again, we did see XRP shoot up significantly and drag the entire market with it. You can still see it here. The peak happened before the peak in Ethereum, in Bitcoin Cash, in EOS. It all happened a bit earlier with XRP. XRP has been falling back a bit from Ethereum. They were only about 10% apart the last time I made a video. Now they're about 20% apart. Still, XRP has a significantly higher market share than it had just a week or so ago, when it pretty much doubled its market share from one day to the next. It's fallen a bit, but it's still holding on there. But yeah, that is what we see in the markets here. Everything's down, just everything. But we don't see anything down like 30-40%, so I'm not too worried here. Sometimes the markets go down, that is just what happens. Let's look at some analysis here. From CoinDesk, all these articles of course linked in the description, and let's read this together. Bitcoin is on the defensive, having breached crucial support on Monday and could suffer a deeper drop courtesy of a bearish crossover between key moving averages. As of writing, Bitcoin is changing hands at $6,420 on Bitfinex, representing a 3% drop on a 24-hour basis. This article, of course, a couple hours old, but the price is slightly higher now, I think. The price is $9 higher now. The bullish break above $6,600 witnessed on Friday had set the tone for a move towards the psychological hurdle of $7,000. However, the rally in alternative cryptocurrencies fizzled out over the weekend. As a result, while Bitcoin managed to hit 17-day highs above $6,800 on Saturday, it fell back below $6,600 yesterday, neutralizing the bullish outlook. Further, the pullback from the weekend high of $6,841 to today's low of $6,370 validates the bearish view put forward by the negative moving average crossover on the monthly chart. Hence, Bitcoin risks falling to the major support at $6,000 in the next few days. Over on the daily chart, Bitcoin has found acceptance below the double bottom neckline of $6,600. The bull failure, though encouraging, is not enough to call a bearish reversal. Moreover, Bitcoin is still trapped in the large pennant, and a UTC close below the lower edge of the pattern would confirm a revival of the sell-off from May highs above $8,500. That said, the probability of a downside break is high as per the long duration chart. And now at the monthly chart. As seen in the above chart, the 5-month exponential moving average crossed the 10-month EMA from above at the turn of the last month, confirming a bearish crossover. More importantly, Bitcoin's failure to hold above the MAs over the weekend added credence to the negative MA signal. And their view, this is the most important part, this is pretty much where they're making the prediction. Bitcoin's drop below $6,600 yesterday has neutralized the immediate bullish outlook. A downside break of the pennant pattern in the daily chart would open doors for retest of the June low of $5,755. The bearish crossover between the 5-month and 10-month EMAs indicates that Bitcoin is more likely to find acceptance below the pennant support currently located at $6,265. So this is looking relatively bleak. In the last couple days, we were talking about potentially the markets having bottomed out, that the June low of $5,755 might have been as low as Bitcoin is going to go, fueled, among other things, by that being roughly the break-even point for miners. At a lower price, they can't continue making Bitcoin. Or rather, they can, but they'll lose money if they try to sell them. So it might look like we're gonna test that again in the coming weeks. Like I keep saying, long term, I'm sure our outlook will be great, but in the short and midterm, we might have to get used to the idea of this bear market continuing rather than breaking into a bull market. Anyways, let's look at some other articles. We finally have some more information about Mt. Gox selloffs. Here from CCN, $230 million. Mt. Gox trustee confirms past Bitcoin selloffs. Now, these have been... we had confirmation of some selloffs before, but there were more rumored that might have moved the market significantly and might be a contributing factor to this bear market because there's just so much money being sold off at once. It can push the prices down and spiral us out of control. It's relatively long, but I think it's important to read this because all of this is important to understand what has been going on in the markets in the last year or so. Bitcoin investors who have dutifully monitored cryptocurrency wallets associated with defunct Bitcoin exchange Mt. Gox for early warnings of a possible sell-off have been proven justified in their paranoia. According to a document published on the Mt. Gox website, Nobuaki Kobayashi, the exchange operator's trustee, sold approximately 24,658 Bitcoin and 25,331 Bitcoin Cash between the last creditors meeting on March 7 and the June 22nd court ruling allowing the estate to exit bankruptcy and enter civil rehabilitation. Sorry, long words are tough for me. Altogether, the estate garnered just under 26 billion Japanese yen, worth more than $230 million US, recouping an average of about $8,100 per Bitcoin and $1,190 per Bitcoin Cash, compared to their current values at $6,420 and $438 respectively. Kobayashi said that the purpose of the sale was to secure the interests of all bankruptcy creditors, which was required before the estate could enter civil rehabilitation. He wrote, "Due to the sale, the bankruptcy trustee has already secured a suitable amount of money to secure the interests that are expected to have obtained by BTC creditors under the bankruptcy proceedings in connection with Bitcoin claims to be treated as non-monetary claims under the civil rehabilitation proceedings. Accordingly, the bankruptcy trustee has determined that the interests expected to have already been obtained in the bankruptcy proceedings can be secured without taking the profit-securing measures under the trust agreement and guarantee, entrustment, and guarantee agreements for the Bitcoin claims. And the Bitcoin claims are not included in the subject protected claims under the trust agreement and the guarantee, entrustment, and guarantee agreement." That is just legalese, but I think you got the drift. Past transfers likely connected to sell-off. Kobayashi had previously disclosed selling more than $400 million worth of Bitcoin and Bitcoin Cash over a 6-month period that correlated with the cryptocurrency market's descent from its all-time high. He incurred significant criticism for the manner in which he conducted those sales. Rather than use an over-the-counter broker like most large-scale buyers and sellers, he sold the funds on order book exchanges, magnifying the impact that these sales would have on the spot Bitcoin price. That, of course, because when you're selling all of that, you're just going through all the buy orders and pushing them down. You're just pushing them down, and that instantly gets reflected on CoinMarketCap and on other websites that are reporting information from exchanges, and it's a disaster. Millions moving at once through a normal exchange is an absolute disaster. Following those sales, CCN reported on several transfers out of Mt. Gox wallets, transactions collectively amounting to more than 25,000 Bitcoin and Bitcoin Cash. Based on today's disclosure, it is now safe to conclude that those transfers were likely made as part of the sale. According to the Mt. Gox Cold Wallet Monitor, state-controlled wallets are currently holding 137,891 Bitcoin and Bitcoin Cash, worth $945 million at the present exchange rate. These funds were recovered after the exchange went bust in 2014, following a $470 million theft that remained the largest such incident until the CoinCheck hack earlier this year. Traders who held funds on the exchange at the time of its demise must submit claims by October 22nd, so if you had money there, make sure you don't forget this, to be considered for compensation from the estate. Now that the estate has entered civil rehabilitation, most creditors are hopeful that they will be paid in cryptocurrency rather than the fiat proceeds from another massive sell-off. However, compensation will ultimately depend on the rehabilitation plan approved by the court. When Mt. Gox entered civil rehabilitation, Kobayashi said that there were not currently any more plans to liquidate the estate's remaining cryptocurrency holdings. And there is, of course, a full document here, which doesn't appear here because I have scripts blocked. But you can read it, it's 5 pages, it is, of course, linked. But this a vital part in understanding this recent, not really recent, it's been going on for a year, this turn towards the lower and lower prices. Now, of course, this wasn't the only factor driving this long bear market, but it certainly seems to have pushed the prices down whenever they were hopeful, or whenever there seemed to be hope that they might be recovering. Because what seems to have happened is that while the prices were going down, whenever they did peak a bit, when we had like 2-3 week runs where the price would shoot up, once we reached certain numbers, like say $8,000 something dollars, he would sell off massive amounts the moment we hit those prices and send the prices crashing again. And while this certainly did not cause the downturn of the crypto prices, this might have been a significant part in preventing them from going back up. So hopefully there will be no more major sell-offs. Ideally, no more sell-offs at all. If there are going to be sell-offs, hopefully they will be over the counter. But we will see what happens in the future here. Well, just completely irresponsible behavior from the Mt. Gox people. Just utterly irresponsible. Okay, next up. Cryptocurrency prices highly correlated to regulatory action, central bank report. This I thought was interesting because a lot of people now seem to think that that news about regulation don't impact crypto at all anymore because we've seen lower impact lately. That seems to be incorrect, and this report found just that. Relatively long, we're not going to read the whole thing, just a bit so you know what's going on here. You can of course read the whole article. New research has found that, despite the popular idea that cryptocurrencies operate generally outside the reach of national regulators, regulatory actions still have a huge impact on crypto markets. The research is presented in a report by the Bank for International Settlements, BIS, an organization owned by 60 of the world's central banks from countries cumulatively making up 95% of global GDP. So this is essentially all the major central banks working together on this report, or rather giving funding for this report. In the report, the data presented shows that while markets do not generally respond to news about central banks creating their own digital currencies or issuing general non-specific warnings about cryptocurrencies, they show a significant response to regulatory announcements regarding the legal status of cryptocurrencies and ICOs, as well as possible expansion and enforcement of AML, can know your customer, and CFT regulations. According to the report, 4 major findings were established about the response of crypto markets to regulatory actions and announcements. First of all, crypto markets were found to respond most significantly to news reports and events concerning bans, restrictions, or legal battles on cryptocurrencies and ICOs. This is pretty obvious that this was happening, of course. Where the news in question directly concerns regulatory decisions or actions regarding the legal status of crypto assets, markets respond very strongly. Now, this makes a lot of fear. Of course, if you're worried that crypto or a particular token you're invested in will be outlawed or heavily regulated, you might decide to quickly sell off before anything can happen. Back to the article. This also includes issues surrounding securities regulation, such as the ongoing ambiguity regarding the United States SEC's pending decision on whether to permit a Bitcoin exchange-traded fund. This does not only work negatively, as according to the report, markets also react positively to news about possible new legal frameworks designed to accommodate cryptocurrencies and ICOs. They go into more findings here. I suggest you read this article yourself, and I believe you can read the report as well. Yes, the full report can be downloaded. Absolutely download that. Make sure you are informed on this kind of stuff. This information, this knowledge will come in handy in the future. If you want to get ahead of the markets, understand what is going on, you need to know this kind of stuff. And you absolutely should be doing your research. That includes reading reports and papers like this when they come out. There's always valuable information in there, and don't be put off by them being long or not understanding every sentence in them. Just try to get the general gist of the whole thing. Next up, XRP. Where is the headline there? XRP search volume spikes, brand distancing from Ripple. Now, this is a very good move for XRP's image in my opinion, but let us read through the article and find out why. Despite experiencing a fall-off in pricing today, after posting over 100% increase in price over the last 10 days, XRP has generated a substantial amount of interest over the preceding 2 weeks. While price appreciation and an increase in valuation is enough to draw eyes in the crypto space, XRP has managed to attract both casual investor interest and the possibility of large-scale institutional money. Last week, XRP was in the midst of an otherwise obvious downward trend in valuation, one that saw the coin fall to 25 cents and nearly retrace all of the gains of the bullish run to start the year that saw the coin hit an all-time high of $3.80. In the span of 2 days, the cryptocurrency appreciated over 100%. Hitting 70 cents before adjusting to a level around 50 cents. While the last 24 hours have seen further decline in XRP, the coin has managed to build significant investor intrigue, in part due to the efforts of former parent company Ripple. Ripple, the blockchain startup behind the XRP currency, has been at the forefront of the cryptocurrency fintech union in growing banking and institutional adoption. XRPRipple, the payment protocol that utilizes XRP directly for liquidity to create cheap, fast and reliable payments for cross-border and around the globe, has been announced to launch as early as next month. Actually, what they said was within 1 month. That is not the same as next month. Now XRP has evidence via Google Trends that the currency is growing in both popularity as well as distancing itself from the Ripple brand. Now, as we always have with articles from either AMB Crypto or Ethereum World News, we have to nitpick here, but some of these things are simply not true. Google Trends is not showing popularity, Google Trends is showing interest. Google Trends is showing how many people are searching for something, but they're not showing if people are searching for something in a positive or negative light. After a major celebrity has a breakdown or says something racist on TV, that celebrity also is being searched more, and if you're just looking at Google Trends, their numbers will also go up. That doesn't mean positive attention, so calling it popularity is misguiding here. It's relevance. Relevance, interest, not necessarily popularity. Now, in the case of XRP, we can assume that most of it was positive attention, because people saw a coin shot up ridiculously much and briefly get to number 2 in the by market cap. But I have to be anal about stuff like this, because I feel like we need to be better as the cryptosphere. We need to be more precise in the way we use language, especially when we have the benefit of text where we have the time to actually go over what we're writing and make sure we're not saying anything misleading. Now, in videos, it's easy to just misspeak and not notice, or when you're doing an interview, there's no way to always be as precise as you'd like to be. But it's a bit disheartening to see so many either mistakes or misleading things in text articles from relatively major crypto pages. Like, yeah, you see it here. They have 2,000 Facebook likes, 3,000, almost 4,000 Twitter followers. And this article alone has 5,000 views, and it's not been on for long. It was released today, so that's always a bit disheartening for me. I think we really need to work on being a bit, not necessarily more professional, but just better in the way we use language, and we need to be more respectable about that kind of stuff. It will be better for everyone in the long run. Anyways, let us go back to the article. I was ranting about the article rather than the content again. According to the online Google Trends tool, which allows for comparison of keyword terms by search volume, XRP has not only more than doubled in searches over the past week, but is putting distance between its association with Ripple, the original company behind the cryptocurrency. While XRP has managed an increase in keyword search volume, a sign that has boded well historically for both the price and interest in the coin, Ripple and other cryptocurrency variants of the blockchain startup in relation to the XRP token appear to be falling to the wayside. While Ripple is still the primary holder of XRP, with over 60 billion coins locked into escrow, here it should be noted, a lot of people don't understand this. Them being locked in escrow means they cannot just dump them all into the market. I see a lot of people worried, rightfully worried, that so many coins are being held by one body, but they cannot just flood the market anytime they want to. These coins are locked away, someone else has the key, and they can't just dump them all into the markets. So just felt the need to clear up a common misunderstanding right there. The company has made a concerted effort throughout 2018 to distance itself from the cryptocurrency. The company has worked to promote devices that utilize XRP, such as the aforementioned XRPRipple protocol for sending money globally, but for the most part has recognized and importantly appreciated the value to both XRP and the investment community over maintaining the integrity of decentralization in relation to cryptocurrency. So while the argument can be made that XRP has more to gain from a tight association with Ripple, such as adoption via Western Union, MoneyGram, and last week's tie to top 10 US bank PNC, the currency can also gain substantial value as a legitimate cryptocurrency via decentralization, which will pay dividends in the long run. Having the differentiation form between XRP and Ripple in terms of cryptocurrency-based keyword search volume is a positive sign that more investors and members of the general public are beginning to recognize the coin separate from the parent company, a feature that Bloomberg found salient enough to devote an article to. While there is some brand confusion between XRP and Ripple, the former looks to make a strong push to stand on its own merit. Now this is an important point here at the end, and I'm also making this mistake, not because I don't know any better, but because it just rolls off the tongue sometimes. XRP is of course the token, and Ripple is the company. So when you're talking about how well the token is doing, it's easy to accidentally say Ripple, but you mean XRP. And I'm trying to be more careful about that kind of stuff. This applies to many other tokens as well. Like Ethereum is the company and Ether is the, not the company, Ethereum is the platform and Ether is the token. And the same thing is true for many other cryptocurrencies. Some of them we have to be careful. Like Cardano is the company, ADA is the token. There's sometimes differentiation like that. And it's important we pay attention to that. I'm trying to be better about it. I also mess them up sometimes when I'm just talking quickly, and but yeah, trying to be better about that. And putting this distance between the token and the company for XRP in particular will be very good in my opinion, because now Ripple is still developing all their software solutions, all their technologies, all their networks for use of the XRP token. And XRP will be used on it either way, but the less XRP is considered as just Ripple's token, the better, because it has strong technology behind it. It's a very usable token. It has real use cases. It is significantly faster, cheaper, more secure than some others on the market. If it's too closely tied to Ripple, the company, people won't see that. So the more they can differentiate themselves, the better, in my opinion. And last but not least, we have some not really worrying, but ever so slightly worrying news out of Block 1, the company behind EOS. 4 early employees and 2 contractors have resigned from Hong Kong cryptocurrency company Block 1 to start up StrongBlock, a new blockchain project that is currently under wraps. David Moss, Thomas Cox, Brian Abramson, and Corey J. Lederer were the 2nd, 3rd, 4th, and 5th employees to be hired by the corporate parent that created EOS, a decentralized operating system and application environment today valued at more than $5 billion. The protocol, which competes with the technology behind the Bitcoin and Ethereum blockchains, supplies a native cryptocurrency of the same name. At Block 1, Moss had been Senior Vice President of Technology Operations, Cox Vice President of Product, Abramson Vice President of Infrastructure, and Lederer Senior Director of Technology Products. The executives joined Block 1 last year, Moss and Cox in August, and Abramson and Lederer in September. Software developers John Eric Cook and Michael S. Mason, the contractors, began remote work on EOS in the spring. But according to their LinkedIn profiles, they quietly left Block 1 and EOS in the summer. This is... Now, I've said it in other videos before, there's a lot of turnover with tech companies, especially with startups. It's not that unusual for companies to lose a lot of their high-profile staff very quickly. It doesn't have to mean anything bad, but if you see 4 out of the 5 first employees hired by the company, all of which had high positions in the company, leave only a year after it was founded, that is worrying. That means there's probably something very big going on within the company. Something about the corporate culture or the direction the company is taking, that 4 out of the 5 earliest employees within 1 year were so fed up with or were hired away that they just left, and that is very, very worrying. Now, I'm generally a supporter of EOS. I think they are a very, very promising token, and that of course includes the company behind it, because they launched it and they're investing a lot in it. They of course got $4 billion in funding from the early funding rounds. Have a lot of money, have a lot of good people are working on developing their product a lot. But this, as someone invested in EOS, this is worrying to me. This is the kind of stuff I don't want to see. If any one of these had left, or even 2 of them, that wouldn't be putting me off. But 6 people at the same time, 4 of which had high positions and were among the first 5 employees to be hired, and it's only been a year. The company has only been active for a year. So leaving that early, that means something inside EOS.io is going very... Block 1, not EOS.io. Something within Block 1 is going very, very wrong. This is not normal, and I'm slightly worried. I hope we will get a better explanation of what is happening here. This is a very long article that goes into some potential reasons and into what these people are doing now. They're starting a new company and a new project, and we don't quite know what's going on there, what they're doing. But who knows, we'll find out soon. But this... I'm still a supporter of EOS either way, but this is a bit worrying to me. I want to know what is going on within Block 1. I feel like we deserve some answers, and I hope we get some kind of official statement about this. Reassure us, please. Please reassure us. Anyway, on this slightly negative note, I'm going to end this video. Just keep the important stuff in mind. We are all invested in great technologies here with so much potential, and in the coming years, we will see so much change. Keep your mind on that. Thanks so much for watching. Once again, make sure to subscribe if you want more videos. Make sure to send me any questions you want me to respond to in a video. The link is in the description. The email is in the description. All the links to these articles are in the description, as well as my social media links and ways to support this channel. And thank you guys so much for watching, and I'll see you guys soon.